Bitcoin just shattered every single record it ever set. We're not talking about a little bump. We're talking about a massive surge that pushed it way past the $118,000 mark. This isn't just history in the making, it's a total game changer, and everyone from Wall Street bigwigs to your neighbor down the street is paying attention. Just this week, Bitcoin absolutely exploded, gaining over 8%. Can you believe it? And get this. In the last year alone, Bitcoin has completely doubled its price, soaring from around $70,000 even before the last presidential election. It was down in the dumps, around $76,000 back in April, and scraping by at $49,000 last August. But it clawed its way back, and then some. Now, Bitcoin's total value is sitting at a mind-boggling $2.3 trillion, making it bigger than tech giants like Google and Meta combined. It even left silver in the dust. This isn't just luck. There are some powerful forces fueling this rocket. Stay with me because I'm about to break down exactly what's happening. And at the very end, I'm dropping some insane price predictions that financial hotshots are already betting on. You absolutely need to see this. So, what's actually pumping so much air into Bitcoin's tires? The number one reason is big institutional money is flooding in like never before. We're talking about massive banks, hedge funds, and pension funds, the real heavy hitters, now piling into Bitcoin. They're not just dabbling, they're getting in deep. How are they doing it? Through these relatively new Bitcoin investment trusts, or what the pros call spot ETFs. These aren't your typical digital wallets. These are regulated financial products that let big money easily buy and hold Bitcoin without all the hassle of dealing directly with crypto exchanges. And the numbers don't lie. Just on Thursday, these Bitcoin funds raked in an eye-watering over $1 billion. This week alone, the total cash poured into these funds is nearly $1.7 billion. Companies you know, like MicroStrategy, are publicly stuffing their cash reserves with Bitcoin, showing the world they're all in. This isn't just about making a quick buck. It's about these massive players saying, Bitcoin? Yeah, that's legit. We trust it for the long haul. That kind of stamp of approval brings serious street cred and long-term stability to the entire crypto world. Beyond the big institutions, the overall vibe in the economy is totally playing into Bitcoin's hand. We're hearing whispers, loud and clear, from the Federal Reserve that they're thinking about making money cheaper later this year. What does that mean for you? When interest rates come down, borrowing money gets cheaper, and people and businesses tend to take on more risk, pouring cash into things like stocks and, yep, you guessed it, Bitcoin. A softer dollar, as they say in the financial world, also gives crypto a boost. There's also this new government spending plan called the One Big Beautiful Bill Act. It's set to inflate the federal deficit even more. More government spending often means more money floating around in the system, and historically, that's been a positive rocket fuel for Bitcoin. And here's a quirky but important detail. Even the price of copper is sounding the alarms for a booming economy. Traders lovingly call copper Dr. Copper because it has this spooky ability to predict where the economy is headed. When its prices climb, it signals strong industrial demand and that money is flowing freely, showing that business sentiment is strong despite all the global trade tensions. All these big picture economic forces are screaming one thing: risk is back on the menu, and Bitcoin is serving it up. Now, let's talk politics. The current administration in Washington is surprisingly pro-crypto. President Trump himself has been making major moves and saying things that are super friendly to digital currencies. He even signed an executive order to build a strategic reserve of cryptocurrencies. Remember April 2nd, Liberation Day? That event shook up traditional markets and sent investors scrambling for alternative assets like Bitcoin, boosting its role as a hedge against disruption. Just last month, the Senate passed a landmark bill called the Genius Act. This bill is all about laying down clear rules and protections for stablecoins, those crypto coins pegged to the US dollar. This is an absolute game changer for bringing more legitimacy and consumer trust to the entire crypto industry. The House of Representatives is set to debate this very act next week as part of Crypto Week in Congress. This isn't some sideshow anymore. The crypto industry has muscled its way into becoming a major major political spender, flexing its influence in Washington. All right, let's get into the nitty-gritty of what the trading pros are seeing on Bitcoin's charts. Bitcoin recently broke clean out of a descending channel pattern. Think of it like Bitcoin was stuck in a sideways slide, but now it's busted through the top and is flying free. This breakout is a super bullish sign. It means this price run is likely to keep on going, paving the way for even higher gains. And there's more good news. The Relative Strength Index, or RSI, which is basically a speedometer for the price, is confirming this massive bullish energy. It shows that Bitcoin has plenty of gas left in the tank. It's not too hot or overbought just yet, meaning there's ample room for it to discover even higher price levels. And using a fancy charting trick called the measuring principle, experts are pointing to a potential price target of around $146,000. That's not a small jump. It implies a massive 32% upside from where Bitcoin is right now. Now, it's not all sunshine and rainbows. Every rocket needs a landing pad, right? If Bitcoin decides to take a breather and pull back, traders are zeroing in on some key support levels. The first big one is sitting around $107,000. This spot acted as strong support back in December and January. If for some wild reason that level doesn't hold, the next major cushion for Bitcoin would be about $100,000. That area has seen a ton of trading action since last November, so it's a solid fallback point. Here's something fascinating. Even with Bitcoin going absolutely wild, the amount of Bitcoin actually sitting on exchanges ready to be traded is at its lowest point in 3 years. We're talking about only $2.4 million worth. What does this tell us? Big investors aren't selling their Bitcoin on exchanges. They're either holding onto it tightly or buying it up through those new investment funds. This creates less selling pressure. Essentially, fewer people trying to dump their coins, which is a fantastic setup for continued price increases. And if you were betting against Bitcoin, you just got absolutely crushed. Over $1 billion in short positions, which are basically bets that Bitcoin's price would fall, were completely wiped out in the last 24 hours. When these shorts get liquidated, those traders are forced to buy Bitcoin back to cover their bet, and that buying action just pushes the price even higher. It's a vicious cycle for the bears, but pure gold for the bulls. But let's keep it real. Whenever Bitcoin hits new highs, the sharks come out. We're talking about a massive spike in phishing scams, wallet hacks, and tricky social engineering schemes. Seriously, protect your digital assets. Use hardware wallets, always set up two-factor authentication, and be super suspicious of any unexpected messages or too-good-to-be-true offers. Sadly, there have been reports of physical attacks and kidnappings targeting people with big amounts of crypto. Your digital security is more important than ever. Also, while Bitcoin has been shrugging off things like the new tariffs from the Trump administration and geopolitical tensions, a really huge negative economic event could still knock it off its game. Remember, during the summer, big stock investors usually pull back their risk. We'll have to see if Bitcoin keeps charting its own course. So, the burning question, what's next for Bitcoin? The answer from almost every major analyst out there is a resounding more gains. Many are already calling for Bitcoin to hit the monumental $120,000 mark by the end of this month. Yes, you heard that right, $120,000 in just a few short weeks. And for the long game, some brave souls are pushing their predictions even higher, saying Bitcoin could easily blast past $150,000 by the year's end. One big survey of top experts set the average year-end target at roughly $145,000. If past cycles are any guide, we could be looking at a Bitcoin peak around early 2026 before things might cool down. This isn't just another pump and dump cycle. This rally is built on rock-solid foundations, massive institutional investment, a government that's actually friendly to crypto, and big economic shifts that favor digital assets. Bitcoin is finally becoming the independent powerhouse its early fans always envisioned. It's proving it can stand tall, untouched by political games or everyday economic wobbles. It's acting like a true safe haven, leaving even gold in its dust recently. But hey, a word of caution. Crypto is still a wild ride. It can be super volatile, so always invest smart and never put in more money than you're totally okay with losing. Bitcoin is writing a new chapter right now. The whole world is watching every single move. And frankly, the stage is set for even more absolutely jaw-dropping moments. That's the full breakdown for today. If you found this info helpful, smash that like button right now. Don't forget to subscribe to the channel for more cutting-edge market insights. And definitely hit that bell icon so you get notified every time we drop a new video. Thanks for tuning in, and I'll catch you in the next one.